Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome back to another episode. Today's topic is how are real estate repairs and improvements handled. Now, again, we're doing an entire series, a bunch of blog posts, a bunch of podcast episodes on real estate taxes, how they're handled. So if you want to check out different ones that we've done or check out as we go along in this series, go to taxsavingspodcast.com/real estate. But in this post and in this podcast episode, we're going to specifically be discussing the difference between repairs and improvements and why it is important to you in your rental property journey. So just at a very basic level, real estate repairs you expense immediately as they occur, and improvements are capitalized and depreciated. So we talked about depreciation on last week's episode. So if you haven't checked that one out, check it out there. But again, real estate repairs you expense immediately as they occur, and improvements are capitalized and depreciated potentially over time. So the first question we want to talk about, what are real estate repairs and maintenance? Basically, repairs and maintenance are things that keep your property in normal operating condition. These items do not materially add value to your rental or prolong the life of the property. So think of things like painting, repairing flooring, fixing leaky plumbing, repairing appliances. Basically, a repair or maintenance is going to keep your property in normal operating condition, like something that needs to be done to keep it where it's at, to provide the same level of value. The great thing about repairs and maintenance is that you can, again, expense them immediately, and you do not have to worry about depreciation or depreciation recapture. So now let's talk about what are real estate improvements. Now, improvements add value to your property or prolong the life of the property. And so improvements go further beyond repairs. So think of things like additions. You add a new deck, a new room, something like that. You renovate an entire kitchen or bathroom. You put new windows in the house. You put new appliances in, full out landscaping, things like that. And if an item falls under an improvement, you need to capitalize the costs for that and then depreciate it, which would also make it subject to depreciation recapture should you sell the property down the road. And the tax law has three main types of improvements, and that's betterment, restoration, and adaptation. Basically, betterment means increasing the property's value, the efficiency of the property, or strengthen or the quality of the property. Restoration means returning the property to ordinary condition after it's fallen into a state of despair or after its class life. And adaptation means converting the property into something different, a new use for that actual property. So obviously, we would prefer traditionally to have things under repairs and maintenance versus improvements. So the question comes into, how do I turn spending into repairs versus improvements? So, again, as we discussed, in general, we'd rather have our spending classified as a repair versus an improvement. And the reason for that is because we can expense it right away without having to worry about depreciation. And then we also avoid depreciation recapture in the event of a sale of that rental property. Now, it is not always 100% clear on how the spending should be treated. So here are just some ideas or some thoughts on how we can make sure that we're doing some things as repairs versus improvements. If you're having contractors come in, make sure they're separating the repairs from the improvements. So request separate invoices for repairs instead of, separate from those improvements that are being done. And then also ensure the contractor is labeling it correctly as repairs. So if you have someone coming in to replace flooring in your rental or replace parts of your flooring, make sure they're doing that as repairing the floor versus not just putting all new flooring in. And we also sometimes recommend using separate contracts or even contractors for repairs versus who you would use for improvements. So first idea is make sure your contractors on the invoice and everything else are separating repairs from improvements and correctly labeling them. The other item we want to think about is sometimes repairing something versus outright replacing it when possible. So for example, instead of repairing your flooring or, instead of replacing your flooring, you could just repair it. So fix up few pieces, repair the flooring in certain areas, but don't replace all of it. You could repair your windows versus replacing and putting in all new windows and things like that. So when possible, think about things that you can repair instead of simply just replacing. And the other thing to ensure, to make it look, or to be able to classify it as a repair, is to use similar materials as the prior material that you're repairing. The IRS also has a few safe harbors that help make this determination easier. Should it be a repair? Should it be an improvement? And within our tax minimization program, we dig deeper into these safe harbors. They're a little bit lengthy to include in a discussion like that, and so we put them in our tax minimization program. If you're not a member of our tax minimization program, go check it out now. It's taxsavingspodcast.com/tax. But there's 3 main safe harbors that could come into play when we're looking at repair versus improvement. And that's the de minimis safe harbor for tangible property, the safe harbor for routine maintenance, and the safe harbor election for small taxpayers. At the end of the day, we just need to make sure we are fully analyzing the spending that we're doing on rental properties and also ensure that we're treating it properly. Generally stating, again, we would prefer repairs where we can expense them immediately over improvements that we would just do depreciation over time. So again, just want to do kind of a recap of this. Real estate repairs and maintenance are things that keep your property in normal operating condition. Think of things like painting, repairing flooring, fixing leaky plumbing, repairing appliances. And again, the great thing about repairs is that you can expense them immediately. You don't have to worry about depreciation or depreciation recapture in the event of a sale. Now, real estate improvements prolong the life of the property. So they go above and beyond repairs. Think of things like adding a new deck to a house or a new room, or renovating an entire kitchen or bathroom, or putting new windows in or new appliances in. If an item falls under an improvement, you need to capitalize the cost of that improvement and then depreciate that, which also makes it subject to depreciation recapture should you sell that property down the road. And again, we want to think of ways that we can turn repairs into improvements, or just making sure that we're documenting everything correctly, that if it's a repair, that it's being labeled like that. When we receive an invoice from a contractor, make sure if it's a repair that they're labeling it correctly so it doesn't avoid any conflict or any confusion down the road. And oftentimes we say, use separate contractors for the different type of work that's being done. If you're doing an improvement, use one contractor. If you're doing a repair, use another contractor that kind of focuses in that area. And then we also recommend that sometimes you might want to think about repairing a specific item instead of simply replacing it. So if you have some flooring that has some issues, think about repairing that flooring in your rental property versus replacing the flooring in all of the property. Or windows, repair some windows instead of replacing and putting in all new windows. So again, the IRS has a couple safe harbors that help make that determination. Is this a repair or is this an improvement? We dive into them in our tax minimization program, but those 3 safe harbors that you might want to check out are the de minimis safe harbor for tangible property, the safe harbor for routine maintenance, and the safe harbor election for small taxpayers. Again, at the end of the day, we just want to make sure that we're fully looking at the spending that we're doing and also treating it properly. Finally, again, we would prefer repairs because we can expense them immediately and we don't have to worry about depreciation or depreciation recapture. And then improvements, we do have to depreciate over time and also worry about depreciation recapture in the event of a sale. So again, this is just one podcast episode. We're doing an entire guide we're doing on real estate taxes. If you want to check out our previous episodes or follow along on the future ones that we're going to do, go to taxsavingspodcast.com/real estate. And again, check out our tax minimization program. We take everything that we're talking about here on our podcast, especially on this real estate side, and dig deeper into it on our tax minimization program. So if you have not checked that out yet, go to taxsavingspodcast.com/tax. I want to thank you again for listening to another episode and cannot wait to do next week's episode. We dive even deeper on different things about rental properties and real estate. So thanks again for listening to another episode, and I will see you all next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.